Welcome to the Debt Matters Podcast, where we help Canadians find solutions to their debt with licensed insolvency trustees from across Canada. I'm Wayne Kay. Coming up in today's show, we're going to talk about household debt and insolvencies that are now surging in Canada. We've got record high level debt. Why is this important? Why is this happening? Will this hurt our economy? Have we seen the insolvency rates change in our country? What can you do to protect yourself from the rising interest rates? And what can you do if you're a saver and you don't have any debt? To help us with this and more, my guest today, Derek Chase from Chase & Associates, licensed insolvency trustee serving Vancouver Island, Sunshine Coast of BC, and the BC North Coast. Welcome back, Derek.
Hi, Wayne. It's great to be here today.
Well, love this topic. And as we've been watching news and seeing what's going on in the country, it is a stressful time with all these interest rates going up and consumer debt. Well, it's only going one way, and that's a big arrow shooting straight to the sky, isn't it?
Mm-hmm. That's right. Yeah. There's headlines are abounding that are talking about household debt in Canada and Canadian household debt being at record high levels. And that is, those are big numbers. They're so big that they almost are kind of abstract or meaningless, like billions, trillions, millions. It's just a heck of a lot of debt.
Wow. And what do you think? Is it going to get worse?
Yeah, it's hard to see reasons why it's going to get better. It's an ominous topic, but it's out there, so we have to deal with it.
Well, we do because people are going to go through this situation and they don't know where to turn. So hopefully that's what this podcast is about. We can give some people some advice and help when they're in a situation where the debt is just too much to deal with.
Mm-hmm. Yeah, I think that's really important to know because you get that situation where you're feeling hopeless and really struggling and causing relationship problems or health problems and sleepless nights, and it's just very unpleasant setting. It's important to know that there are federally approved programs to help to ease that pressure. And if you don't know about those, that's a tough spot to be living. So this is important information for Canadians.
Right. So we've seen, families having to decide on, they're paying the rent or their mortgage because so many have been caught up in these increased mortgage rates that are here. Mm-hmm. And then there's also, I still need to get food. I need to feed the kids. We're going back to school. Where are we going to get the money? We put it on credit card and the snowball, it just starts happening, right? It starts small, but you've seen it where it just keeps growing because there's more month than there is paycheck.
Yeah, for sure. And, I think some people would say Canadian household debt is at a record high level, so what? Why is that important? And I don't think people realize just the power behind these big macroeconomic factors when interest rates jump up quickly and faster than people expect. And there's all this debt out there. It just ripples through the economy. So, all of a sudden people change their spending patterns and it changes people's lives and it changes businesses and it changes patterns where people are buying. So there's all these ripple effects that happen when there's a couple percent higher interest on lines of credit or on mortgages. And so it is important to everyone and because it touches our lives. So just to understand these currents that are pushing us around is, I think it's wise to gain an understanding of them and what they're likely to do. So, I would forecast that there'll be less discretionary spending over the next couple of years because people will have to be reallocating money towards their new mortgage payment. Like that they're not going to have that $500 to go on a weekend trip somewhere. It's going to be used up for housing. And so that's just one example amongst many where in general, there'll just be less discretionary spending, in my opinion.
Mm-hmm. But yet, people are still spending. Summer vacations come to an end, and the amount of people out traveling, even though I don't know about there, but the hotel costs that I've seen are astronomical these days. And I think, how can a family go on vacation for 5, 6, 7 days, and hotels are costing $400 a night? It's wild.
Yeah, and that's that overall concept of inflation pushing costs higher. In turn, would cause that family that we're using as an example right there to put it on their credit card or line of credit, and then all of a sudden they've got higher interest rates on their line of credit as well. So it's not trending in a good direction there, and eventually there'll be consequences for that. So it's important to understand. It's important to talk about and get your head around, but it's fairly ominous for sure.
So when it comes to Canadians having all this debt, how many are getting to a point where they're seeking out consumer proposals or bankruptcies? Do we have any stats on that?
Well, yeah, there's the federal government does keep track of that, and the department that regulates the insolvency filings in Canada is called the Office of the Superintendent of Bankruptcy. And every month they post statistics for insolvency filings in Canada and even in each individual province or territory. And there's no doubt about it that insolvencies are surging as compared to 2022. I see these monthly stats, and virtually every month the increase ranges between 19 to 30% higher than the prior year. And so, those are significant bump ups year over year. And it's pretty obvious why. I mean, we just touched on a couple of examples, and unfortunately, we don't see that trend changing for a little while.
Mm-hmm. What would it take to change it, I wonder? Just all of us will have to just stop traveling as a whole. And I mean, we still have to eat. We still have to buy gas. I don't even know how this is going to change. It's a very weird place to be.
Yeah, I think that's a whole other discussion, but I think we have to be talking about productivity and, making people's lives better on the productivity side, as opposed to the feeling that we're getting taxed to death every time we turn around to do something. It's crazy that way. Mm-hmm. But if I could make that change by pushing a button, I would, because I really feel for people these days, and just the feeling of walking out of a grocery store with barely anything and you've paid a fortune for it. It's not pleasant, and so it's just tough. The Canadian people, I'd say, are groaning right now.
Absolutely. So what's your advice to protecting, ourselves from these rising interest rates? What should we do?
Well, sometimes there's not a lot you can do, but some things that you can look at are whether you've got any redundant assets that you really don't need, that you could maybe liquidate and put against your line of credit or credit card. That can sometimes be helpful. You can certainly review all the interest rates that you're paying on different products and shuffle some balances around to push more money into the lower interest rate product. You could go to your bank or credit union and ask for a consolidation loan to try and consolidate to get away from the products that have the super high interest rates into one that's more of a normal rate. But even that normal rate has gone up substantially. So those are some of the things that you can do. You can, if you're already though in a position where you're carrying too much debt, then you'll probably have to turn to one of the federal options, which is more powerful, and that would be to make your creditors an offer through what's called a consumer proposal to pay back perhaps just a portion of the debt over time at 0% interest. And That's become a very popular option right across Canada, and it's very effective. Typically it runs very smoothly. So if you've never heard about that before, you should really do some looking into that option, because it can be a game changer. And that's federal law, as is getting protection through a bankruptcy filing, which can sometimes also be the right move, especially if you want something that's relatively fast and inexpensive. Sometimes bankruptcy can fit the bill a little bit better. And even though that term might sound scary, we just look at it as another tool in a toolbox, just like if you're going to fix a leaky faucet and you needed a screwdriver or a wrench. So educating yourself on different ways that you can adjust your finances is one way to protect yourself from paying high interest rates.
Mm-hmm. Yeah, and I think we're seeing a lot of people that are really starting to question whether they need, a new vehicle right now. Maybe they're used to buying one every 4 years or every 5 years, and they're looking at the costs of them now, and they're so high. And I'm seeing more people that are saying, yeah, I'm just going to hold on to my vehicle for a couple more years.
Yeah, maybe the pendulum will swing back towards fixing things yourself more than just sort of using the plastic thing that you throw out. Fixing things yourself, having the backyard garden, doing things that you can do, as opposed to hiring it out and having that impact your cash flow.
Yeah.
So I think people will start becoming more creative in that regard. And yeah, like you say, keeping that vehicle and just fixing it, maybe even fixing it themselves.
Right. With YouTube, you can do all kinds of things these days. Not me, but everybody else can.
That's right. Good point.
Now, what if you're a saver, you don't have debt? I guess you're living perfectly right now.
Well, that's the other side of the coin, isn't it? If you don't have any debt, you've managed to organize your affairs such that, you're going in that positive direction. It's good to know that you can actually get some interest on your money out there now. As part of the financial counseling sessions that we do with people, there are some banks that will give you anywhere 2.5% to 5% interest on your savings. So it's also something to be aware of. And rather than having your money sit there at 0% interest, get a few bucks by putting it into a place that will pay you a little bit of interest income on your savings. So even though the borrowing is more expensive for those people that are savers that haven't been getting any interest on their savings for a long time, well, now that's available. So even if you've only got a small amount, hey, well, why not get a few bucks on it? It's better than nothing, as they say, and maybe it buys your coffee for the week or the month.
Right, and it keeps growing. It compounds. Compound interest.
Yeah.
Start playing with the compound interest calculator. It's one of my favorite things to play with.
Yeah. And the banks have competition in the form of online banks, and that's where you can see a little bit more competition on the interest rates that they're paying to savers. So, something for people to research if they want to make a bit of money.
Yeah. And I was just it's funny you brought that up, because I was just watching a video on that. And you don't even have to lock it in, for 3 years or 5 years. There's all kinds of different saving techniques out there where your principal is, relatively safe-ish. So I thought that's great advice.
Yeah. It's just another bit of financial advice to be aware of. And ultimately, that's how you protect yourself from rising interest rates is having that financial literacy, educating yourself, being creative, and taking on the challenge and winning that challenge.
See, I think it's so good that when they work with a licensed insolvency trustee, that you do the credit counseling, because there's a lot of families and people that just didn't grow up being educated when it comes to money. We learn as we go. And there's so many things that I wished I'd known 25 years ago that I'd put into place. It would have made my financial life even better. Well, What's some advice in learning? When you say there's ways to learn about financial literacy, what advice do you have for that?
Well, there's a lot of different sources that you can use to educate yourself and become more financially literate. But, as part of those financial counseling or credit counseling sessions, the best case scenario is where you make a decision as a household or as a family to really communicate about this topic, and you can really make it a teachable moment. I was just chatting with a person that we were talking about this and talking about their soon-to-be teenage children, and I'm saying, well, this is great. You've stopped the negative momentum of this credit card interest rates. Now you're going to be able to save a little bit every month, and why don't you go the distance here and make this a real teachable moment for the whole family, and take it on as a challenge to try and get to a certain savings amount in 6 months, and just talk about it around the dinner table, and almost make it a challenge or this whole learning experience. And you can pass along some great lessons to those kids that will be part of their lives. And that really warms my heart when you see the impacting the whole family and setting off a generation, the next generation in a positive path. So that was a good meeting.
That's a great way to end on such a positive note. And I guess for anybody listening and you're in a bad financial situation, you're not alone just seeing what's happening in our country.
Yeah, I agree. You're not alone, but there's resources, there's help, there's support, and control the controllables, and there'll be better days ahead.
Absolutely. Derek, always a pleasure. Thanks very much for offering advice to all of our listeners. I sure do appreciate your time.
My pleasure, Wayne. You have a great day.
My guest today, Derek Chase. You can learn more or schedule a free consultation with Chase & Associates, licensed insolvency trustee, by going to their website, bankruptcytrustee.bc.ca. That's it for today's Debt Matters podcast. Make sure you subscribe wherever you get your favorite podcast from. And of course, for more information, you can always check out debtmatters.ca. Thanks for listening.